Such as the status of the Rocky Beef Expo, it's become a must-visit for cattle experts from across the globe. Foremost among them this year was Randy Block from the American state of Colorado. As you'll hear, he's extremely positive about Australia's beef exports to the US. Now, that forecast has met with some scepticism, but on a closer look, it does make a lot of sense. According to Randy Block, it's all about America rebuilding its herd, currently at its lowest level for 40 years.
We're in the process of seeing the herd go from a major liquidation stage because of the drought. We're seeing it, we expect to go through a situation where we start to keep these females back and expand the herd here over the course of the next couple of years. So it's been a long, drawn-out process as our cow numbers have declined 13 out of the last 15 years.
I've just noticed some figures on carcass weights. You've got 40 million cattle fewer than the 1970s, yet the volume of beef that you produce is actually up.
That's correct. That's exactly what we're doing. We add about 6 pounds of carcass weight on an annual basis. So you go back and think about that, these animals are 200 pounds a head bigger than they were in 30 plus years ago. So it's been phenomenal what we've gone through. And productivity wise, our beef production is nearly at record high levels today in spite of having that many fewer cattle to harvest.
Now, as you rebuild your herd and you keep your females, that of course is promoting an opportunity for Australian exporters.
Absolutely. There's going to be a tremendous demand for from the U.S. We'll send a price signal around the world that we need more lean meat. About 45% of our beef consumption in the U.S. is in the form of ground beef. So our consumers love that product, and if we're taking 1 million to 1.5 million head of cows out of our slaughter mix every year, that's a big void. So we expect that our beef imports will be up 500 million pounds this year. We think they could grow another 200 to 300 million pounds here over the following 18 months after that. So a 30% increase over a 2-year time period to go from 2 billion pounds of imports to nearly 3 billion pounds of imports by 2013, 2014.
So is anyone making any money?
You know, we finally have seen a situation in here over the course of the last few years that our cow-calf producers have seen some real profitability, and that's what's really stimulating the interest to expand the nation's cow herd. We've got great profit opportunities in here. We've got calves that would be bringing $1.75 to $2 a pound for a 5 to 5.5 weight calf. So record high prices. We think those prices will stay at those kind of levels at least the next 3 years. So that's some great incentive for people to expand the herd. For our margin operators, though, for our feedlotters, our stocker operators, those margins are getting very tough and small because there's more capacity out there than there is livestock to fill that demand.
So there you have it. America will need more and more cow meat from Australia, which I guess is not surprising when you consider the number of hamburgers sold every year in America, about 7 billion. Let's see how demand was in the sale yards last week, and there was some solid action as restockers revved up and processors looked to secure suitable stock heading into the colder months. There was another major factor for exporters, the very welcome slide in our dollar. So prices were from very firm to strong. The cow market was steady, although there's a bit of market chatter about at least one major producer looking to build cow numbers, maybe in anticipation of that grinding meat demand from America. Now, the strength in the market allowed the Eastern Young Cattle Indicator to sustain recent gains at $3.74 a kilo. The live trade out of the north has some issues. Exporters are not chartering ships because of uncertainty about future quotas. Subsequently, space on available boats is very tight. So tight, in fact, there's talk the quota for this quarter may not be met. And prices fell. There's a lot of nervy buyers and sellers up that way, and the lift last week of 5,000 tonnes in the box beef quota did nothing to calm the bigger picture. Lamb values have been hit by a substantial drop in skin prices, down 60%, or about $10 to $12 a head on last year. At the same time, lamb exports are way up, in fact at a record high, reaching 55,500 tonnes in the first 4 months of this year. The market chatter has prices for lambs heading north as we move into winter, especially if the Aussie dollar continues to slip. To grains now, where forecasters are looking at a bumper world corn crop, a slight decline in wheat production and a very bullish outlook for oil seeds. If the American corn crop does hit a record 376 million tonnes, this will change the dynamics of feed grain prices for the next year or more. In Chicago last week, corn was off almost 27 cents. Wheat was also down, and soybeans fell 20 cents, although in historic terms that's still a cracker price. Local futures were mixed as traders tried to digest the impact of a bit of a dry spell in the east and some very, very handy rain in the west. Still at home, and that canola price is intriguing. And those planting this season would be very hopeful of doing much better than wheat. And why not? European production will be way down and global stocks are said to be at a 9-year low. So canola at present is well above the $500 mark. Sorghum looks to have found its trading range, and wheat has also settled for the moment around that $230 a tonne level. To New York for cotton and sugar, and it's mixed news for Australian producers. Cotton slumped to its lowest price in 18 months on the back of a forecast that world stocks will lift next year to 74 million bales. Locally, the harvest is well underway, with yields good, but quality is a bit of a struggle because of the very wet summer. So cotton dumped more than 7 cents on the week, and sugar is okay for the moment, with the key to price direction being the looming Indian monsoon. Finally, to wool, which saw the market steady in the back of our falling currency and some ordinary wool on offer. The Eastern Market Indicator closed at 1,155 cents a kilo, a drop of 15 cents on the week and 168 cents down on this week last year. And that's the Landline check on price.